Hi believers, this is Nishant from Team Waya. Today we will discuss what is happening in the Indian markets. Is the correction due? Or if the correction occurs, what should be the strategy to invest? Also, we will discuss the capex announcements made by the finance minister on the budget day. Let's start with the major indices first. The Nifty index took resistance at 22,120 levels twice. The index has formed a range of 5.5%, which is big enough for an index like Nifty. The short-term support for the Nifty is at 21,000. The break of the range on either side will decide the direction of the Nifty. However, we believe that Nifty will consolidate in a range before giving breakout on higher side. For the longer term, we expect Nifty to head to 24,000 by June and 25,000 by December 2024. I request you to go through the report which we have sent across to all the Vaya users. The report also includes good commentaries regarding the bullish sectors. Moving on to Bank Nifty Index, the index has underperformed the Nifty and it's down 5% from live highs. On chart, the range of the inner channel within the broader channel is 9.5%. This is a big range for a Bank Nifty index. But for trading point of view, this will give many opportunities. Some PSU banks which are comfortably funded can do better than big private banks. The banks like Central Bank and Canara Bank is one of our favorite banks within the PSUs. Moving to CNX 500 index. CNX 500 is a universe of top 500 stocks. Post breakout in July 2023, the index has given a vertical rally. We still believe that the target that can be achieved is 20,500, which is 2% higher from here. The only sector which we are going to cover today is pharma. The large pharma companies in India has come out with good quarter 3 results, which suggests that the sector is back in focus. Although the rally on the chart started in November 2023, we believe the index has long way to go. Let's discuss some budget points regarding capital expenditure. The overall capital expenditure in the union budget has been increased by 33% from 7.5 lakh crore to 10 lakh crore, bringing it to an all-time high of 3.3% of GDP. This will boost India's growth and it's also positive for the employment. Markets have taken this budget optimistically, and the stocks of specific sectors, which is in government's capex focus, are soaring. Also, the share of capital spending in total budget of expenditure has increased from 12.5% in 2020 to 23.3%. This is very positive for the country like India, who's aiming to achieve 5 trillion in GDP. Let's discuss and take a look at the sector which are benefiting from the capex. The first is railways. The government is connecting India through the rail, which also helps to reduce logistic cost and time. The next is infrastructure. Infrastructure is considered as spine of the economy. Coming to defense, the Indianization of the defense equipments pushing Indian companies to manufacture defense equipments in India, which leads to reducing the imports and also giving rise to the exports from the Indian markets. Ports. As you all know that India is aiming to achieve a 5 trillion economy. When the economy keeps rising, more imports and exports will happen. For that purpose, we need to develop our ports. The next is airports. The rise in per capita income and rising air traffic is leading to more demand for the airports. Schemes like Udan is subsidizing airlines to fly in tier 3 cities as well. The last is tourism. We all know how our Prime Minister marketed Indian islands. This helps us to save forex outflow as well as also attract global tourists. Moving on to the conclusion, the Nifty index is trading near life high while Bank Nifty is underperforming and it's down by 5% from its life high. It's mainly because of disappointing results from HDFC Bank. Sector focus is in large cap pharma due to better than expected quarter 3 earnings. Other sectors which should be in focus are IT, metals, and PSU banks. The companies from infrastructure, capital goods, power, and microfinance have posted good results. Although there is no sign of pessimism, the market experiences periodic corrections every year. So it is critical to remain invested and keep evaluating risk with the opportunities. At Vaya, we make our best efforts to keep you informed about markets through our weekly bite and sectoral update. We continue to evaluate opportunities for our subscribers and strive hard to remain a step ahead to create wealth for us believers. Thank you and good night.